Hey guys, in today's episode, we're going to talk about drawdowns and why they are a natural part of the trading business. And hopefully I give you some perspective on how to view them in a way that makes them less hurtful. Now, if you haven't done so already, make sure you check out our website, www.tier1trading.com. We got a whole bunch of cool educational stuff over there for you to dig into, workshops, training lessons, software, lots of fun stuff. www.tier1trading.com. Check it out. I don't want to say losing streaks don't bother me at all. That would be inhuman. But you just accept them. Again, it is, I look at it as it is the cost of doing business, right? The other day, I took my kid to like one of those gas station type of stores to get him a treat. He helped me out with something. So I took both kids to this place. We got these big old slushies, right? So these big sugary drinks. And right before we got to the cashier line, you know what happened? I knew it was going to happen. If you got kids, it always happens. Drop, splash, boom. Spilt the entire drink, right? Manager came out and said, don't worry about it. Go get another one. We'll go ahead and clean this up, right? Now, technically speaking, the business took a loss on that, right? Technically speaking, the business took a loss. That is the cost of doing business. It is built in to any business. Same thing if you go to McDonald's and they mess your order up and you return it, right? They can't just repackage and sell that order to someone else. They got to dump it. Same stuff. I hate this part, but restaurants at the end of a certain period of time, right? They can't necessarily save the food. You got to dump it, right? It is the cost of doing business. It is built into every business. If you've ever started a business, when you map out your business plan and you do your expenses and your predictions, that is a cost that is calculated in. Trading is no different, right? When we look at our 40% return a year, that's not the only number we're looking at. The 40% return is after everything. Losses are taken into account. What type of percentage hit do I have to take to make that 40% return? And that's why, I did a podcast on this before, but we talk about, we had a conversation yesterday about this a little bit. I'm not sure if it was I think it was on the first part of the session, so YouTube heard it as well. But we were talking about kind of knowing your numbers and whatnot. The most valuable part for me, of knowing my number it isn't necessarily the actual number. It is the equity curve. Because the equity curve tells me the story of how that number was achieved. For me, that is much more important. And especially from a psychological standpoint, right? Think about it from this perspective, guys. If I told you, right, hey, Evans, you're going to make 50% a year. Right? You're like, again, unless you're this trader on the internet that thinks 50% is a bad thing, you're looking at 50%, you're like, okay, I can get down with that. 50% a year. But as soon as you hit a 10% drawdown, you start panicking. Because you're like, wait, I'm supposed to hit 50%. I'm not supposed to be negative 10. But if you have the equity curve, and the equity curve shows you the path of what it took to get that 50%, where you start off negative 10, and you go plus 20, then you go back to plus 10, then you go plus 30, and you go back to plus 25. Now you kind of understand, okay, there's going to be these ebbs and flows. There's going to be these wiggles. This is a natural part of the process, and it helps keep you mentally sane. And that's necessary. Once you get experience in the market, then you have more and more belief. So over years, you get more and more belief because you're actually doing it. But at the beginning, it's another reason why backtesting is so important, because until you actually have those live results to be your proof, that's the best you can work with to anticipate what it's like. Orsi mentioned something as well, right? We're talking about the restaurant or the store where they gave my kid the free slushie. He said they kept the customer. Yeah. And you can look at that from a trading perspective as well, right? If you're in a drawdown, let's say you have a good system and you're in a drawdown and something happens, right? That drawdown is the spill and you bail on your system. Well, what are you doing? Well, you're starting from scratch, which is a waste of time. you're also probably going to miss the best period of your system. But for those who can fight through it mentally, stick with their system, the best is yet to come. They'll be benefited. They'll reap the benefits at the end. So it happens all the time. It happens in different ways. I've had, I can give you the stories of my two worst drawdowns. One was a 17% hit to start off the year. January 1, straight down 17% from like January 1 to like, mid-February? I think it was like 6-week period. That's the harshest drawdown I've ever taken because it came quick. And then the rest of the year was great. If you go back on YouTube and watch those videos, you'll see the documentation of it, where I started off the year saying, man, I suck. But wait, it's only 1 month in. Wait to see how we turn this thing around. And we turned it around, right? I just happened to take all of my losses at once and right away. And then I've had drawdowns that stretched out. I think my longest actual time duration drawdown it had to be, I think, 20 something weeks. It was like an entire summer, right? Does that sound right? Maybe not 20 weeks. That's maybe too much. It was like May to August, June, July, August. So maybe close to 20 weeks. And it wasn't a bad drawdown at all. It was more of like a break even type of drawdown, like losing like 1% like a month. But I just couldn't, for the life of me, I couldn't get above that previous equity high. So different types. You can get sharp and painful. You can get long and torturous. You're going to experience them all in your trading. Hope you enjoyed the episode. If you want more from yours truly, more of a visual version of this, meaning actually digging into trades, talking about technical analysis, looking at the charts, make sure you check out my YouTube channel. Just go to youtube.com/Akil Stokes, or just hit Akil Stokes in that little search thing and I should come right up. I got daily live streams, well, not daily, but Tuesday, Wednesday, and Thursdays. And of course, the big weekend video giving you a heads up about what's on my radar for the week to come. www.youtube.com/Akil Stokes. Check it out, subscribe, hit that bell.